It's a range-bound day of trade today. In fact, markets are just about tentative, about 2.5% down when we talk about Sensex as well as the Nifty. But the bigger action is really playing out in Bank Nifty today, which is a clear underperformer and has shed a little more weight in the last few minutes of trade. And that is on account of some of the big boys which are really not doing well, especially led by ICICI Bank, which had a great day in the past few days. HDFC Bank also really has been losing some steam in the last few minutes of trade, dragging that particular index down. But it's the mid-cap index which is in the green and a clear outperformer at this point, Sonia.
Absolutely. Hi, Nisha. Afternoon. Even, those comments that came in from SBI earlier in the day where Anshula Kant told us that the Samadhan process is not very encouraging and there's a lot of confusion with respect to the lenders and coming to a consensus, etc. All of that has really thrown the banking space, the PSU banking space out of whack. And of course, a lot of frontliner private sector banks are also under pressure. IndusInd, Axis Bank are all down about 2% or so. Even the move in crude, the huge spike that we've seen over the past many days has caused a lot of the oil marketing companies to be under pressure. Big losses seen in names like HPCL, etc. But the 32nd GST Council meet is underway and our colleague Timsi Jaipuria is here to give us some exclusive details on the key developments on that front and what we can expect. Hi, Timsi.
Well, there's a big relief coming in from the GST Council for the MSME sector. Firstly, the composition taxpayers where the threshold currently was 1 crore annual turnover, that has been enhanced to 1.5 crore annual turnover with a relief on compliance also. That is, they will now be allowed to file annual returns and make GST payments quarterly. This will be applicable from 1st April 2019. Again, another relief coming in for MSME sector, that is the minimum threshold for getting a GST registration, which was currently at 20 lakh rupees of an annual turnover. This has been enhanced to 40 lakhs of annual turnover. That means any manufacturer, service provider, etc., who has an annual turnover of 40 lakh rupees annual turnover will now be mandatorily used as a GST registrar. However, there is a catch here. States have been given permission that they can either continue with the 20 lakh threshold or they can opt for a 40 lakh threshold. Most likely, BJP ruled states are likely to go in for 40 lakh threshold. Also, this again be applicable from 1st of April 2019. So there's a big relief coming in for the MSME sector, and as I speak to you, discussions are currently underway on the remaining issues. That is, firstly, whether the prices of lottery should be treated at par. Secondly, a major relief of rate rationalization for real estate sector, and also not to forget matching of data for RFID along with e-way bill so that maximum enforcement can be done. We'll keep you posted on it. Back to you.
Oh, surely you will. Thanks so much, Timsi, for giving us a heads up on what could really come out of that crucial GST meet today. On to another CNBC-TV18 exclusive, and according to sources, government is close to meeting its 80,000 crore rupees FY19 divestment target. And our colleague Sapna Das joins us with all those exclusive details. Tell us, Sapna.
Well, we are clearly given to understand that the government will be close to achieving the 80,000 odd crore divestment target for FY19. Further to what has happened in the current financial year, a couple of more things are in the pipeline. For example, the third tranche of the Bharat 22 ETF is definitely on the cards. Apart from that, we're given to understand probably at least 2 to 3 more OFSs are in the pipeline, something probably from the defense sector or probably from the steel sector. The companies are not well decided as of now, but you can expect at least 2 more OFSs, 2 to 3 more OFSs in this current quarter of the financial year. Also in terms of the Bharat 22 ETF, we are given to understand that some rebalancing of the index is underway as of now, and we'll get to hear more about that. Apart from that, the big one, of course, is RSE PFC. That transaction, 14,000 odd crores worth of receipts are expected. Apart from that, buybacks have already been done. Some more are in the pipeline, so around 8 to 10,000 odd crores will come through that. A sale of enemy property shares, around 2 to 3,000 odd crores will easily come in from there. So all of this put together can, will easily take the divestment receipts well beyond 70,000 crores is what we are given to understand. Currently, they stand around 36 odd thousand crores. A quick clarification in terms of what happens to the Sudi stake sale in as far as Axis Bank is concerned. Here again, the approach is very clear that this could just be a filler option if FY19 divestment target becomes a challenge. There is no formal decision on that as of now, but a filler option in case the FY19 target is a challenge.
Okay, well, that's the word coming in on divestments, but thanks, Apna, for that. But moving on, IndusInd Bank reported a mixed bag yesterday. The stock is, in fact, one of the biggest losers today as brokerages have downgraded earnings and cut the target price. Abhishek is here with all the details. Abhishek, over to you.
Well, Sonia, to begin with, brokerages say that the loan growth momentum is really strong. So if you look at the loan growth at 35% is one of the highest seen in last few years. However, on the flip side, the elevated slippages and decline in provision coverage ratio is a cause of worry and has not gone down well with the analyst community. You look at the slippages, 806 crore, X of ILFS has almost doubled from 419 crore in the previous quarter. And the net interest margin has been on a declining trend from 4% to 3.83%. Over the last 5 quarters, if you see, the NII growth has been lagging the loan growth. So therefore, the earning estimates have been cut for second quarter in a row by analysts, and they have cut FY19 estimates by 4 to 6%, while FY20 estimates by 2 to 6%. Two key brokerages, that is HSBC and IDFC Securities, have cut down their target price, while 6 out of the 9 brokerages that we have up on screen have a target price ranging between 1900 to 2000 per share. All brokerages, however, remain optimistic on the stock. Back to you.
All right, there's a fair bit of optimism from the brokerages on the stock. Thanks, Abhishek, for getting us all those details. But that stock is beaten down in trade today. It's another, earnings that we are really watching out for. Tata Consultancy Services, the big boy in the IT sector, which really, in a way, starts the emphatic earnings season. And that's happening today. And that is in the green today. Even though the overall indices are looking weakish. So ahead of the Q3 earnings, it is in the green, and Rima will tell us what's really to expect from Tata Consultancy Services. So Rima, so it's going to be seasonality this time?
Well, the numbers should be out post-market hours closer to 5 o'clock. The stock has been a big outperformer. It's rallied close to about 40% in the last 1 year, outperforming the Nifty IT, which rallied close to about 20%. And that's because the company has been reporting good numbers. In fact, it's on track to end FY19 with a double-digit growth. In Q2, its constant currency growth was at 11.5%. This quarter, the momentum will weaken if you look at it quarter on quarter on account of seasonality, year-end furloughs. So we're working with a dollar revenue growth of 1.2%. In constant currency, it should be a growth of 1.7 to 2%, which is lower than the 3.7% growth that it had in Q2. That's on a quarter-on-quarter basis. But if I compare it to last year, then the growth will look better because December quarter of last year had a growth of 1.3%. Margins will be slightly higher by 20 basis points, aided by the rupee depreciation. Rupees depreciated a little more than 2% on an average this quarter. And margins will continue to be within the company's guided band of 26 to 28% for the second consecutive quarter. Profit, according to our poll, should be higher by close to about 3.5%. What the street will watch very closely will be any kind of management commentary on the outlook for calendar year 2019. There are concerns on global macros. It appears to be a lot more uncertain given the trade worries, Brexit. There's a possibility of a US growth slowing down. Accenture, when they came out with their numbers last month, they warned of a volatile macro environment. So that will be closely tracked. And secondly, even on the margin front, because while the rupee has depreciated on an average this quarter end to end, the rupee is now trending close to 70. So there has been an appreciation which could eat into the company's margins in the coming quarters. Back to you.